Well, there's been a lot of frightening headlines this week predicting that Australia's housing market is about to plummet.
It comes as the latest data shows house prices have slipped for the fifth straight month across the country. So how low will prices go? Joining us live is property economist from Housing Market, Dr. Andrew Wilson. Good morning to you, Andrew. Generally speaking, what's going on?
Well, it's a flat market, we know that. We've come away from those low interest rate drivers of recent years. So it's a lot more balance between buyers and sellers. Early days to start predicting a collapse in prices, but I think that generally it's a lot more competitive now, the market, most markets, and we've certainly seen clearance rates down over February, so we have a good indication of the shape of the market, but I wouldn't be panicking yet if you're a homeowner in terms of price collapses.
So if the market is coming off the boil a bit, does that mean it is favouring buyers over sellers?
Well, I think it's fairly evenly balanced. When we get clearance rates in the 60% range, it means that it does have very low price energy, but still, I'd say in favour of sellers. But I think that the market's very steady now, and I think it'll continue that way.
Let's do a quick whip around. So Sydney, Brisbane, Melbourne, are they sort of following a similar trend, and then Perth's going the other way?
Well, Perth perhaps has bottomed out now, which is a positive after a number of years of flat prices growth or falling prices. Other markets are quite stable, and it's a very mixed market. Inner suburban areas in Sydney are doing better than the outer suburbs, and it's the reverse in Melbourne.
So how does a flattish market affect, say, like first home buyers?
Well, first home buyers are certainly back in town. We've seen those stamp duty changes last year. We've had a flood of first home buyers in New South Wales and Victoria, and of course lower price energy is a positive for them.
What about the rental market?
Well, the rental market's a sad story. If you're a tenant, we have an undersupply of rental properties. Rents are rising, and I think tenants will be renting for longer, maybe for life into the future.
Well, that's a bit grim, isn't it?
It is a bit grim, yes.
No, if you think about it, the amount of money that people are now putting towards their rent, they're just not having an opportunity, are they, to actually save up to buy their own home?
Well, that's right. And look, one of the conundrums of the economy is that we have this low incomes growth and people aren't spending. The economy, even though employment's looking good, isn't up and running now. And part of the issue is, the high proportion of incomes that are being paid for tenants. And of course, renters make up a significant proportion of the housing market. So perhaps it's an area that's been, I guess, undervalued in terms of focus. It's all about sort of first home buyers and homeowners. But maybe we start looking more at the rental market. And of course, restricting investor activity, which we've seen the regulators doing over the past year or so, only restricts rental properties, which means higher rents.
All right, Dr. Andrew Wilson.
Thank you, Pete.
Just get right across it there, mate. Yeah,
Thank you
very
so
much for joining us today. Appreciate that. Now,